Hello everyone, I'm Yogesh Shroff, founder and CEO of AltAccess. I'd like to welcome you to this session on the market outlook going forward. The idea today is to take a step back from the noise, look at the data, and structure your thinking in three clear parts. First, the overall market view. Second, the sectors that hold promise. And lastly, a framework for navigating through the next year. Let's start with the market outlook. 2024 was a year of consolidation for Indian equities. After leading the post-COVID rally, India underperformed relative to global peers through much of the last year. Factors included tariff uncertainty in global trade, a slowdown in domestic government spending, tight liquidity conditions, and elevated starting valuations. The good news is, conditions are changing. Fiscal policy is now geared towards growth. Monetary policy has turned accommodative. Corporate balance sheets are in the best shape in a decade. Globally, the possibility of US rate cuts and a softer dollar could improve liquidity for emerging markets. Brent crude prices remain stable, which eases pressure on India's current account and inflation. Overall, 2025 and 2026 looks like a year of transition to me, from time correction and uncertainty towards recovery. Volatility may persist in the near term, but structurally, the conditions are lining up for a healthier growth and earnings cycle over the medium term. Now, moving to which sectors will perform well. Certain themes are better positioned to benefit as the cycle improves. First, manufacturing and capex revival. With corporate balance sheets repaired and private sector investment now starting to outpace government capex, capital goods, electronics, and niche industrial manufacturing could see tailwinds. Second, pharma and healthcare. India remains critical in generics and contract development. As global supply chains diversify, this sector could gain further traction. Third, financials. A revival in banking, lending, and consumption, aided by easier liquidity, should benefit the broader financial system from banks to NBFCs. Lastly, consumption and discretionary spending. Rural demand is showing signs of recovery, and premiumization trends in urban markets continue. Consumer-oriented sectors could benefit if incomes and sentiments improve through the year. Now, how should you navigate the coming years? We believe the coming year calls for discipline and perspective. These three principles stand out to me. First, look beyond the headlines. Global trade tensions and tariffs will continue to dominate the news headlines, but these often mask underlying domestic resilience. Second, focus on fundamentals. Earnings growth, balance sheet strength, and structural drivers matter more than short-term price swings. Lastly, think long-term. History shows that every correction eventually looks like an opportunity when viewed within 3 to 5 year lens. To sum up, 2025 and 2026 may not be the year of runway returns, but it could be a year when multiple growth engines like government spending, private capex, consumption, and financialization starts firing together. Volatility will remain a part of our journey, but longer term trajectory for India looks constructive. Thank you for joining us for this outlook from AltAccess.